Welcome to the channel. I'm James, and today we're looking at Sofi Technologies Inc. ticker symbol Sofi. They have just released their earnings for Q4 2021 and the full year, and we're going to be going through them right now. You can see the market has reacted very favorably to those earnings, up almost 13% in the post market to $12.69, now 70 cents, which was up higher. It was $11.20 on the close, which was down 2% on the day, but the post market is reacting very well. Now obviously it is down a lot from its previous highs of $25 and $24, but up from its 52-week low of $8.82. So let's get into these earnings. This is the fourth quarter and fiscal year 2021 results. Record GAAP and adjusted revenue for the fourth quarter and full year of 2021. Fourth quarter, 286 million GAAP revenue, up 67%. 280 million adjusted revenue, up 54% year over year. Fourth quarter adjusted EBITDA up to 5 million positive for the sixth straight quarter. Easy for me to say. 523,000 quarterly new member and 906,000 quarterly new product adds up to 51% sequentially. You can see basically what as they said, we've hit new highs across our key financial and operating metrics in the fourth quarter, finished in 2021 with record annual results, says Anthony Noto, CEO of Sofi. Now, if we just look at the consolidated here, this will give us a pretty good overview. We have the 3 months ended here and the year ended. So what happened in the previous quarter in December 2020? Total revenue was 171.4 million. That is up massively, 67% to 285 million. So that is up 67%. But even on the year end, a much better story. 565 million up to 984. So that is up 74%. Revenue is climbing massively. Unfortunately, this company is not profitable at the moment. They do have a net loss. On the quarter is slightly worse, 82 million in the red in 2020 end quarter, and that is 111. But on the plus side, they were able to raise their revenue by quite a bit. Still losing some, but you know, in these companies we do care more about revenue in the short term. In the full year, it was minus 224 million, and now that is up unfortunately to minus 483, up 116%. Loss per share, basic and diluted, 15 cents a share compared to $1.85. And now we have $1 compared to $4.30. So it is improving. And if we look at adjusted revenue, we'll just look at the year here. 621 million compared to $1 billion. And the adjusted EBITDA is minus 44 million compared to 30. So if we just scroll down a bit here, they do have some other results that we want to care about. You can see the members steadily growing. Up from 1.8 to 3.4. Products are up as well, almost doubled in that time. Products by segment, lending and financial services. You can see that the financial services products has increased quite dramatically. Lending products have stayed relatively flat. And if we keep scrolling down, we will have this is the breakdown of the revenue lending. We'll just look at the year end, 480 million and is now up to 738, 54% increase. Contribution profit, 241 million up to almost 400. So everything is up on the lending side. Let's just keep going down. This is sort of the breaking down of the lending. Home loans, personal loans, student loans. We'll just be looking at the year end again. Compared to the previous one, 2.1, 2.5, and 4.9. You can see home loans is up slightly, personal loans are up massively, and student loans down slightly. 9.6 billion to 12.6. So overall, massively increasing, and that was sort of the breakdown you can see on the product side. Up slightly on the products as well, 917 million to 1 billion. Let's just scroll down again. This is on the, let's just go a little bit further down because we can get to the total consolidated numbers here. This is on the consolidated statements of operation and comprehensive loss. Interest income, total interest income, 363 million, down unfortunately to 355. We have the, let me just scroll down to go back to loss per share, which we discussed before. Overall down. Stock issues, this is what I want to draw your attention to here. Stock has gone from 73 million to 520 million. So that is increased, I can't even do the math, sixfold, which is pretty crazy. Now, I don't normally look at these kind of stocks, so maybe a bit more familiar for other people, but this is up massively, which you do not like to see if you're an early investor, because they've diluted you in that respect. Your earnings, or in this case loss, is not as valuable. Well, hopefully when they are making profit, it'll be more valuable, but obviously it's down at the minute. Let's just scroll down to the end. If we just go to the free cash flow, which is just at the bottom here. This is the last thing. Assets are down. If we look at the assets, assets are up, 8.5 billion to 9.1. Liabilities as well. Let's see what the liabilities are. They are down 5.5 billion to 4.4. So that is good to see. And then if we just keep scrolling down, we've got the operating activities here. Unfortunately, a net loss minus 224 to 483. And we would do normally the free cash flow, but because this is negative, we've got net cash used in operating activities, and the free cash flow has decreased. Free cash flow is cash from operating activities, which is this line here, minus capex, which is purchase of property, equipment, and software. Capex is doubled, 24 million to 52, but the net cash used in operations is a lot more. So they have a negative free cash flow, which is why I am not going to my discounted free cash flow models and Buffett Graham intrinsic values, because I'll just show you what it does. It'll show that the stock price should be in the minuses. It doesn't really work well when they're in negative free cash flows. You have to use other metrics. But let's just quickly go into the last part. We're going to look at some technical analysis on the stock. Let's just add some moving averages firstly. We'll add the 50-day moving average, which will be in green. This is the shortest moving average that I look at, and then, well, you can see here, unfortunately, if the price is below these major moving averages, it's going to be pretty bearish overall. But let's just add the 100-day and the 200-day. I add the 100-day in yellow, and then finally the longest loop moving average, which is the 200-day in red. So let's just have a look here. What are we seeing? We are seeing that the price is below all three of the major moving averages, but it looks like it potentially could break through. Now, this 50-day has acted as a pretty consistent level of resistance. You can see at the start of Jan, it did hit there and immediately came back down. So very telling tomorrow if it can break through this. So it hasn't broke through this as sort of a level, well, I mean, ever really. It came through here back in September, broke through, and then dropped back down. The 200-day and 100-day, I don't think are too useful in this instance, but a big day ahead if it can break through this 50-day moving average. Next, we want to look at is the MACD, which is the moving average convergence divergence. What we want is we want the MACD and signal lines to have crossed, and we want them to be positive as well. And let's just see what we have. They are crossing, which is good to see. They've just crossed yesterday, so that is a bullish sign, but the lines are below zero. We want to see these moving up. So once again, this is a sell signal, and even TradingView does say it's a sell signal as well. And finally, let's have a look at the RSI, which is the Relative Strength Index. And the stock is trading in about the middle. Now, it has been pretty consistently towards the oversold side, but I wouldn't say anything too massively. And if we have a look at the weeklies, not much data to go on here, but this is the lowest it's ever been. So sentiment is pretty bad. Personally, I wouldn't buy this stock, but that's just me. I know people really do like these kind of stocks, but not one for me, and the models don't like it either from what I just showed you. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.